Welcome to the channel. Today we're going to be looking at an overview of the market, where the S&P 500 is and the Nasdaq, what we are expected to see, what the technicals would tell us, the economy and the state of where we are in the market. Let's begin with the S&P 500. The S&P 500, on the general outlook, I think we are still trading below 50-day moving average. I think we are above 20-day moving average on a daily. What this means really is that we're not far from the correction territory, and then yes, we have seen a bullish reversal candle, but we're not out of the wood yet on the S&P 500, given the fact that we're in earning season. Some stocks have declared their earnings, they're good. Some are below expectation, and some of the stocks relatively they perform abysmal, to be honest. But then the S&P 500, we have seen it actually went a little bit higher, then came down. That was last week, and it ended last week as high as 1.4 or 1.5 for the week. That was the week ending 5th of February. But let's look at the Nasdaq. The Nasdaq also, the Nasdaq just recently came out of the correction, which is about 16 or 17% or thereabout. And the last time such correction happened, anything that was that low, I think it was pre-November 2020. And aside from that, we're looking at the March 2020 dip that was almost 40% or so. So, on the Nasdaq, we're still expecting some stocks to declare their earnings. Maybe their earnings will help, just like Amazon declared an earnings last week, and it did help push a little bit of the Nasdaq upward. However, we cannot rely on companies such as large as Amazon to help push the Nasdaq. It means that we expect better earnings from other stocks that are within the Nasdaq. On a general overview, of the market now, given the inflation, given the taper, given the balance sheet, given that the Fed would likely increase interest rate hiking about 5 or 6 times this year, the environment is not the best conducive for return. We're still in earnings season. We hope some stocks come back with good earnings to at least give some energy to Nasdaq and the market generally. However, for Facebook and Alphabet, you need to check both of them. Facebook guidance is not encouraging. That of Alphabet is outstanding. Guys, as an investor, you need to put your money where you can get good return. Let's have a look at the chart. Let's see what the price action is saying. We are looking at Nasdaq on a weekly chart. Today being 6th of February 2022. Market is closed, so there's no movement on the chart. As clearly as we can see, we are not out of the wood yet. What I can see from the price action here, we're still below 50-day moving average. We're trading below 200-day moving average. This is the weekly chart, by the way. This is the bullish reversal candle. This last week, the week ended with about, I think, 2.4% higher than previous week. But what I can see here, let me just draw this support line. It looks like we are not heart of wood yet. We definitely need um, sorry, we there's support that I can see here, and this support until we can break this support. Oh, sorry, resistance upward. Once we can cross this resistance to the upside, then we might conclude that we are back on the uptrend. For now, we're still under 50-day moving average. We're not even close to 20-day moving average yet. We're still under 50 days. And, so obviously, it's still an uptrend, but we're still within the correction territory. We're not out of it yet. Let's look at the Nasdaq, the S&P 500. Um, it looks the same. Let me draw a trend line here so you can see what I'm looking at. This is what we're looking at. You can see this. Now let's come back here. You can see the last time we traded the S&P was below 200 moving average was March 2020 lockdown, the pandemic. So you can see here, this is our candle. This is the bullish reversal. This candle is still on that 20-day moving average. For S&P 500, we're above 50-day moving average. So this is acting like a support. Actually, I need to do this. Just a second. This is serving as a support here. Now, when I mean to say resistance, because it is support that comes to resistance depending on where the position. So this is serving as a resistance here. See? So until we can break this resistance to the upside, then it becomes support. Yeah, and it might just test it a couple of times. So what we might be experiencing now, it could go sideways. We could just be it can start consolidating and try this resistance a couple of times. If it breaks to the resistance, consolidate around here. Otherwise, it will continue to try to break this resistance. You can see that it actually did try to break it, but before the market closed, came back. This is the weekly chart. Can we just look at it on a daily chart? It's on a daily chart. This is 200-day moving average. We are out of 200-day moving average. This is just a second. This is 20-day moving average. This is 50-day moving average. So as you can see, we're still, let me draw the support line here. This will be resistance. Okay, sorry about that. This will be resistance, you see? So, okay, this is now support because it's above this now. So, meaning that for S&P, we have crossed over the 20-day moving average. So, we are heading to the 50-day moving average. However, it could still come back to try this. So meaning that we might just be consolidating around here for some time, except this earnings season, we can get some of those, heavyweight stocks in the Nasdaq or S&P or Dow Jones to really do extremely well, to perform extremely well. It could help lift Nasdaq or S&P above this, then we will be looking at trading above 50-day moving average on a daily. But on a weekly, this is what we are looking at on a weekly. So we might experience some consolidation around there, but you need to know that the economy is not actually bad. The economy is actually growing because of that. So earnings might actually be better as well. Once earnings are better, I mean, once the economy is doing well, the earnings will become better. The last job report was good. However, it didn't really affect the market. The market actually ignored the news. So you see, it's very important. Sometimes you filter all the news. Some news will impact the market, some will not impact the market. Can we look at some individual stocks now? Let's look at Meta. Let's look at Meta. Wow. Now you can see Meta on a weekly chart. It is sitting on a 200-day moving average. This is standing like a support here. See, on a weekly chart. What you need to understand is any breakdown of this, break below this, we are in weird territory, meaning that this is full metal will be on downtrend under the territory. Now let's look at on a daily chart. On a daily chart, wow, you can see I actually had this up here before. Let me delete this. Guys, I will be cautious to invest on metal for now. Even as I've seen the breakdown of the guidance, it's not looking it's not looking good. It's not what you compare to other. You will not. Um, Let me draw this support line here. Okay, I think we are above this support line. However, it will still go back down to test further down. If it tests further down, we are looking at about 213 or 210 for metal. Facebook. I will be adding more if that scenario happen. There's a resistance here. There's a lot of gap for this metal stock to fill before it can return back to its position. Its previous high. There's a lot of gap to fill. You know, um, it would take more than just another stock having a good day. Trust me, this is a bit dicey for metal. Let's look at Alphabet, Google. We're looking at the GOOG. There's GOOG and GOOGL. Okay, the class one and the class B and the class C. I think the class B is exclusive. So yeah, so you have access to class A and class C. Now, what we can see, let me start removing this. Uh, um, Now, guys, with the result you have seen, look at on a daily chart, we are clearly above 200-day moving average here. We are clearly above 20-day moving average. We are actually clearly sitting on 50-day moving average, and this is serving like a support. Let me just quickly do this on Alphabet. Yeah, you need to understand that on Alphabet, sorry, guys, this is serving as a support here. We're above this now. Now, for Alphabet, the earnings gave them a push up. Push up came here above 3,000. Now we are back at just below about 2008. This is a buying opportunity for anyone that has not got you know um, Google. You want to start with Google now, even if they're going to do their 20 to 1 split. This might be a good buying opportunity. I have it already in my own personal portfolio we have in some of our funds. Now, the point here is that you could add from here, you could add more, or depending on the scenario of other earnings, other stocks that will declare earnings, or within the S&P, Nasdaq, or the overview of the market generally, if the market continues to go on consolidation, we might also be here for some time. Let me draw, there's a resistance here. Yeah. Meaning that we might just be here for some time. I'm Nothing is impossible, but I'm not sure we are likely to come back down here for now. But if that happens, I will add more to my share of Alphabet. I mean, Alphabet has demonstrated that they are not a company or stocks to joke with. You know, they are in this. They are the winner so far. So good. Amazon did well as well, but Alphabet, if you check their guidance, their finances, their cash flow, which is very, I keep saying it, cash flow is very important. When you see it, you would, if you compare it to Meta, you would, come on, guys, you put your money where you will have a better return. Investors will have better return with Google, Alphabet than any other for now. Let's look at another stock that actually had plummeted recently. We're looking at Adobe. Look at Adobe. Okay. With Adobe, we're still trading on a daily chart below 200-day moving average. Don't forget that Adobe 52 weeks high was 699, and it came down as low as 488. Now we are above 20-day moving average. We're still here. It will take much more for Adobe in these circumstances that we have at the S&P is still below 50-day moving average. Nasdaq is still below 20-day moving average or so. It would take a lot more for Adobe to cross over here, yeah, to begin to move on the upside. It's not possible. I mean, nothing is impossible. Send the chart, guys. Please do your valuation. Make sure these stocks are good for your portfolio before you go you buy any of these stocks. Make sure you check. Do not buy stock because of anybody, because somebody said this on a YouTube. Thank you for watching this channel, and thank you for standing by. We will continue to give good educative videos that will encourage and be positive towards your investment journey. Thank you.